Hey guys, Mike here. So got a loaded video for you for a loaded week ahead. And we had hardly any data last week, and this week is loaded with major data coming out this week. We'll also get to hear from a lot of the retailers. We're also going to go over a few things. One, I'll put all the economic data at the end of this video. That was requested. If you want to see it, that way you can see it. If you don't, you don't have to worry about that. But more importantly, I'm going to show you a certain pattern that I showed you on Microsoft and NVDA. I'll show it to you on SPY. I'll show it to you on Tesla to see if this is going to play out, because obviously we got the bounce on Friday, an insane rally in the last 15 minutes. I mean, absolutely nuts. I'll show you how crazy it was, by the way. Understand, we are still in negative gamma. We bounced for one simple reason at that point in time, which was a lot of major moving averages are getting hit and a lot of oversold is going on, okay? And so I also showed you the SPX sitting in that major channel right there. Also the gap fill on what? SPY on Thursday. So we needed to bounce. We just need to see if it's going to continue. The futures are green now, okay? And so we'll see, because and you get these, right? The market does not go straight down unless it's a black swan event. It goes down, it comes up, it goes down, it comes up, and eventually it bottoms out. Now the question is Jim Carson going to be correct when he says, nope, this is just a bounce, we're going down even farther because of March OpEx? Or is Tom Lee going to be right, where he says, nope, we're forming a bottom right now for the first half of the whole year? And so that's what we got to find out, because don't forget, not only we got news, March 4th, tariffs are supposed to kick in. Again, put in the bottom of your prediction. Is Trump going to let them kick in, or is he going to do the same thing he's been doing? Just put out a tweet saying, still negotiating, move it down the road till April, right? We keep getting these delays. So is that going to happen or not? And how's the market going to react if they do kick in versus if he delays them again, okay? And so far, the Trump administration is getting what they want as far as driving the 10-year down. I'll show you what that's got to do with, but also watch the 10-year, because you might get a bounce in the 10-year according to whatever happens with this data, but also the fact it's coming into an area where you could see a bounce, okay? And then we'll go over really the Mag 7 right here to show you what they're looking like, because again, you're not going to have some significant move higher without them. You've seen that, right? We were up here at the top just kind of doing this because the Mag 7 wouldn't do anything. Then the Mag 7, Mag 8 actually, turned red and started coming down, and the market went, boom, 5% down pretty quickly, okay? And so you got to have those. But also, what's the bond market telling us? I just showed you last week, like Wednesday, the bond market was pricing in 2 cuts. That has changed. Now they're pricing in 3 cuts. First one in June, which Jim Carson actually says that actually is what he predicts as well. Next one's going to be in September, and now there is one in December scheduled. So now it is 3. Okay, this can change. It always changes, but it's what the bond market is trying to tell us right now currently. Now, again, the economic data, you'll see at the end why it's probably telling us that. And when you look here, this is the 10-year, right? It's actually below the 200 moving average, but it's coming down in this area right here, which is a pretty important area, right? It's got a few bounces here in the past. But this is the area, if it breaks down below this, because remember, this is the 4% area. Usually when it gets above this, that's when the market is like, oh boy, we don't like this. The economy starts struggling. Something about that 4% area right there. And so that's to keep an eye on, see if it's going to hold up there or not. You can see all the bounces had in the past. Again, TLT still ripping higher, but what's it coming to? It's coming into the 200 moving average. I don't know if I worry about the 200 moving average versus as far as resistance concerned right there, that white line. But you can see it's been resistance in the past. Okay, it's been support in the past. And so watch this to see if there's a flip. And TLT right now is becoming, I mean, obviously a huge trade, because you see it in the options market, right? This thing, look at this, highest ever, all-time high for options on TLT. Let me know if you've been buying this or not, but this is getting pretty crowded, right? They're piling into this, trying to capture that yield, okay? Now, again, we talked about this bounce. I'll show you this Thursday. Yes, I think I titled it Edge of a Cliff. Well, shockingly, look, this thing's coming into 3 trend lines. 2 trend lines, 1 support line, right? And so, yeah, that was definitely the place for the bounce. And the bounce was pretty good, sold off in the day as usual, went red as usual, same playbook, and then surged at the very end. But again, there's that gap fill on SPY, took out this daily fair value gap right there, which is the last one on that list. And so we're going to see if this continues. Again, the futures are green right now. We've seen the futures green every day, and then it sells off in the middle of the day. But how crazy this rally was at the end was just really nuts, right? I mean, it came down here. This is the sell-off in the middle of the day after lunch. This is the usual. Hits the 582.50, comes up, recaptures this one right here, 584.70, recaptures, or actually meets the first target, and then hits the second target. Look at this move. I mean, the last like 15 minutes of the day, it was almost a full % on the SPY. It was an insane move. At the end of the day, that's something you'll rarely see, 1% on the SPY in 15 minutes. Now again, to me, like 596.50 to 596.75 is going to be key. If we get above that tomorrow and can hold it, we're going to 598.75, and then we're going to challenge that huge $4 billion dart pool level that we haven't been able to get to. It seems like, well, about a week right now, but 599.98, so right around 600 is what you're looking at. But we've seen this before. Like every night, they run the market up, gap it up in the morning, and then somehow something gets tweeted about some tariffs or something happens, and then we start selling back down, taking liquidity again. So that's what we're going to see if that trend is going to be broke, or that's what we're going to end up doing tomorrow. Another thing, of course, the reason why you think this thing was so overdue for a bounce was just playing out sentiment, right? I mean, you've seen this going everywhere, and when you look at it, this is the AAI bull bear spread right here, but sentiment in the garbage. I mean, just all the way down here. And when you see this kind of stuff, this was the bottoming process in like 2022 after we crashed. This is the kind of stuff you see like in a crash to be this low. That's what's so insane about this one. Again, you come over here and see it right here, AAI percentage bears, and you can see on these spikes right here, that's usually a bottom, right? Or you start to get these big pops, and you can see it in 2022, but normally you're down way more than where we were at. You know, that's what got people surprised. And I did a video, a couple weeks ago saying how everything's just so out of whack with sentiment and everything else. The put call ratio, I mean, there is no puts. You know, that's what's really nuts about it compared to what it was like 3 days ago. It's like everybody's just all in or whatever. And one thing you're seeing here is if this was playing off like Wyckoff distribution, I showed you how it's on Microsoft, NVDA, how it's kind of played out. And you can see SPY. And this is somebody predicting this right here. And this is what they're saying. You're going to get this bounce, which that's what we're getting. They put this out Thursday. And you can see that move back up, right? And so does it get past that or not? Or is it just another move up to try for big money, try to get shorts in to try to push it down farther because of OPEX? That's what we got to find out, right? It's just that simple. And when you look at what's happening with a lot of these things, what are you looking at? See if NVIDIA can get above that 200 and recapture it. That's going to be key. Or do we get rejected? All right, the RSI is below 50 on the day right now, which means bulls are not in charge of NVIDIA right now. And so that is key. It's the third or second heavyweight stock, depending on what ETF you're looking at. And when you look back at other times where it has came down and rejected, you can see there's decent moves down once the rejection happens. Okay, it doesn't look very big, but that right there is a 25% move down once the rejection happens. Okay, you can come down. You can measure many other times this has happened, but what you're looking for is to get above it, retest hopefully, and then just take off. Again, that's a 35% move down once it rejects. That right there is a 20% move down. And so that's the kind of stuff we're looking at, right? And a few of these are below the 200. And so that is key. And the 200, it's a big one, right? You look at Google, it's another one. It's below its 200, all right? It's got, got to move up here. Also got that 0.5 field we came down at. But again, that area will now be resistance. And so when it comes back up, does it get rejected or do we recapture it and continue to move up? Okay, that's going to be key. Here it blew right through it. Nice rally up, we go on. It's just a regular old correction, nothing, no big deal, right? And again, a correction can be more than 5%. That's all we're down now, it's like 4.3, and we'll be down only like 3.5 by tomorrow when we open up the gap up and stuff. But again, you can see it here, came down, rejected right there, boom, down we go. And then was able to get back above once it was finding resistance many times. So, and then it's bullish above and bearish below. That's just the way it is. And you can see, I mean, Google, what is this? This is an oversold bounce. You get oversold on these daily and weekly time frames, you're going to get a bounce, right? Here's Amazon. This was not below the 200, got oversold, got its bounce. It is below the 100 moving average, which isn't really anywhere near as powerful as the 200, by the way. But we'll take it off there. And so it hadn't got down to that yet. It's had a nice pullback, that's for sure. Microsoft's another one. This one right here is way below its 200, but it got a bounce where? At the 50 weekly moving average, okay? And so we're going to see if it can hold. This level really is key for Microsoft. Like I put a box there for a reason, because in the past, when you look at this right here, it has gotten multiple bounces happening, okay? This one didn't quite get oversold yet, so you can see right there, bounce, bounce, and here we are again, okay? So really a good place for this one to bounce as well. Second and third weighted stock, depending on what ETF you're actually looking at right there. And so this is another one. So if NVIDIA can get going and Microsoft can get going, Apple's been holding up, which we'll talk about, then guess what? The market's going to move. That's just the way it is. They make up a big portion of the S&P all by itself. Okay, so that's going to be key. And that 200 is so far up there. I mean, if it even got back to the 200, that'd be a big move for Microsoft. One we hadn't seen in quite a while. You look at Apple, it's been holding up. This is the reason why the sell-off has not been any more than what it is. Okay, because this is either your first, second heaviest weighted stock that is. And every time it gets below that channel, it bounces. It hadn't even hit its 200 on this sell-off either. Okay, Meta, Obviously, big takedown, but this one right here is another one. Nowhere close to 200. It's actually sitting at 50. So all these mega caps are setting at these major moving averages, right? 50, 100, 200. And so this one's come down nice a bit, been consolidating right there. Again, with this one, the big thing is going to be was a 14% move down right there. That trend line, which was resistance, will be resistance once again. This is in a discount. If you look at the last swing low right there, so this one's already in a discount, right at the golden pocket, bouncing to the penny. And so does it want to come down, touch the 100? That's what we'll find out. This one's nowhere near oversold. It had to go down quite a bit more to get oversold on the daily. In the weekly, that ain't happening. It ain't been oversold in the weekly in like forever. And so, in that sense, a 2022 crash. And so this one, that trend line right there at the top, that will be resistance coming back up. If it breaks through there, then we're cooking with Crisco. All right, that's another one. It's not anywhere near as heavily weighted as a lot of these other stocks. Okay, but again, it's a very popular stock and it does hold some weight. And then of course we pull up Tesla and look at a few things on Tesla. What did this one do? Got to the 200, it bounced. Got down that little box area we had marked out. A lot of people sitting there at 270 just waiting, like I said, and they're buying in. They're selling puts, all that good stuff. Got oversold. There's your November election gap. And you knew they wouldn't give it to you that easy, right? So don't be surprised. A lot of people are going to play this one up, but that's, what is that, 330, 325? That 325 is going to be key, right? It was resistance, then support. If it gets above that, then you're cooking, okay? And that will put it right there, that trend line too, somewhere in that area. So if it gets above that, it can absolutely move, but it has to get above that 325 area. But a lot of people are going to play calls up to that area. That's what they're going to be looking at on this one. And the real question with, is it in this pattern? Is it the same thing you see on SPY? It's Wyckoff distribution. And when you just look over here and follow through on this thing, you can see that peak right there, UTAD, don't worry about all that, what that means or anything. But is that what that is right there at the top of that channel? And then that move down and the little bounce right there. You can see it right there. Is that what that is right there? Okay, if that's what that was, and all of a sudden here comes another big sell down, which was this right here. Boom. Got a little dip. Got a little move back up, right? That was this. And then we started moving down again. And so that's the wrong way. There you go. And so you can see. And so is that where we're at right now? We're getting this pop back up. And then we're going to see another leg down. A lot of people think so. Right, and we can, you can try to predict that all you want, but that is going to be the key right there. Okay, and Tesla can fall all it wants to. I mean, it don't have enough weight like NVIDIA, Apple, and Microsoft to really affect the market too much because right now its numbers are coming in just horrific on car numbers and stuff out of Europe, China, and everywhere else. But that's where we're at on those. And if those start to move, well, yeah, the market's going to have a crazy rally, okay? Now, when it comes to earnings, a lot of high beta stuff, a lot of retailers, HUD 8, Plug, crypto stuff. You see crypto going crazy right now from the president's executive order, Okta, AST, Space Mobile. Then some retailers on Tuesday, Target, Best Buy. Then you have C, AutoZone, PaySafe, EVgo or EVgo. CrowdStrike's going to be a big one for you right there. Nordstrom's another one. Ross, another one. You got all these retailers. I can't believe ChargePoint's still in business, by the way. And you got Abercrombie & Fitch on Wednesday. Foot Locker. That night, you're going to have Marvel, which is a semiconductor right there. Zscaler, MongoDB, Victoria's Secrets, Lending Tree is going to be in there. Thursday, JD.com, Cracker Barrel, Kroger, BJ's, a bunch of other small ones right there, Macy's. Then that night, Broadcom's going to be a big one. And then Costco, Gap Incorporated. And then Friday, nothing really to speak of. When it comes to data, you're going to have a loaded data set here. Going to have Monday, final manufacturing PMI, asset manufacturing PMI, asset manufacturing prices, construction spending month over month. Tuesday, don't worry about it. Wednesday, ADP non-farm employment change, final services PMI, ISM services PMI, factory orders month over month, crude oil inventories. Then on Thursday, you're going to have unemployment claims, revised non-farm productivity quarter over quarter. And then Friday, average hourly earnings month over month, non-farm employment change, unemployment rate. And then Powell is going to speak at some point in time. I really don't have a clue what he's going to be talking about. I don't know if he's going to be testifying or just speaking in some college, but we'll find out. Now, when it comes to data, some that came out. Obviously, we had the PCE prices on Friday, came in as is. The Fed really likes to look at this one. You can see they're not really moving right there too much, so that's not that bad. And the options market really kind of telling us that they don't see a problem with it. And when you look back at norm, you can kind of see it is above what it was in 2018, but not when you go back and look at 2008 through 10. Then you got the manufacturing data. Again, Dallas Manufacturing Index slipped back to 47, so that is in contraction. But the big thing is the prices, right? The prices actually popped on the Dallas Fed Manufacturing Index quite a bit. So we're going to see if it's an anomaly or not, or just a one-off. Then you'll go over here at Dallas Fed Manufacturing Index when it comes to the firm's outlooks. Well, back in contraction you go, big drop, no shock. And remember, all of this is coming with no tariffs, right? As far as I know, there's no tariffs been put on. They've just been threatened and given some deadlines here where they're going to kick in, but they have not yet. And then you got Kansas City Fed Manufacturing Index. Again, this one's been in contraction for like 2 straight years. It is staying in contraction. You can see what's going on with, I like to look at, like, orders, production, all that stuff, and all that stuff fell. So that's no big surprise right there. I don't think anybody's too surprised. And then when you go over here at jobless claims for federal employees, this is one people are freaking out about. But look, it's not even close to what we've seen in the past. Remember, a lot of these people are still collecting your hard-earned tax dollars to sit at home till September. Okay, I don't know any publicly traded company or any company in the private sector that would pay anybody to sit at home for 7 months and do nothing after firing them. Let me know in the comments if I'm wrong on that, but that's what we're doing. Okay, so it's kind of a bait and switch to say we're cutting, but actually no, they're still on the paycheck. At least till September, and there's a chance they even bring them back. Yeah, you just don't know. So we'll see how that goes. So anyway, buckle up for another fun week. There's no doubt about that. Let me know how you think the market's going to react and everything. Won't be surprised to see green Monday, Tuesday, and then we'll see what happens Wednesday. And let's see which one is right, Jim or Tom Lee, that is, on their prediction. Definitely bold prediction, so we'll see. So please hit the like and subscribe button on your way out. Think about signing up for the membership. Less than $8 combo, and I will see you guys tomorrow.